Welcome back to the very final segment of Business AM. And in studio, I'm not alone. I'm joined by a gentleman who I'll give the liberty to introduce himself.
Well, my name is William Odhiambo Ramogi. I run a business called Elim Capital. I'm an economist and an analyst.
Okay.
Yes.
So our topic of the day today is money and finance. So when you talk about finance, what exactly do you mean?
Well, money is in essence currency, the unit of exchange or the unit of value expressed in terms of paper, coinage, and so it is what you exchange on a day-to-day basis. But now finance relates to how we manage the money, how the money comes in, how the decisions we make in terms of how to preserve the money, how to keep the money, and of course how to use it or spend it or invest it or save it, as it were. This all applies to finance. But finance also applies to other modes of money, like bonds and stocks and money markets. All this applies to issues of finance and not necessarily your cash or currency.
Okay.
Yes.
So in relation to personal finance, so many people have money, but the money is not working for them. And I believe that's why Elim Capital as a school exists. So when I have money, how can I make my money work for me?
Well, through investment. Investing your money ensures that even when you're not there, your money is working, as long as your money is there. Whether you are awake or asleep or working or not working, your money is working for you. One of the easiest places and the cheapest places to invest in is the stock market. Because with as low as 2,000, you can go into the stock market and get yourself maybe 20 shares or something. And you can do this on a month-to-month basis, so that you don't have to go to the stock market, let's say with 50,000 at once or ₦1,000,000 shillings at once. If you don't have it, you can actually just say, out of my savings or out of my salary, I will set aside this amount to go into the stock market and invest. But beyond the stock market, we also have real estate, where you can actually just buy land, let it appreciate, and sell or develop, and get a rent income. There are other modes and ways of investing, like bonds or the money markets, as it were, that may be available, but perhaps at a higher amount than most Kenyans can afford. Yeah.
I hear you, and I like the fact that you've brought about the stock market and the real estate sector. However, these investment channels have their own challenges. Particularly, the stock market is very volatile. I know someone who was worth 2 billion in shares one night, and the next time he woke up, he was worth 500 million Kenya shillings. In relation to real estate, we've seen Kenyans buying land, and then one day or the next, your title deed is not legitimate.
Well, of course, every business has its risks. When you open shop this morning, there are risks that you expect. There are brand risks, there are commercial risks, there are legal risks. In the same vein, in investment, there are risks. In real estate, of course, there are fraud risks that an investor faces every day. But that does not negate the fact that it is a well-paying investment vehicle. And if you invest properly, what you need to do is due diligence and understand who you're buying from, and perhaps just follow up with the government. Of course, many times, even government agencies have failed us. But that still does not negate the opportunity that is there in real estate. Perhaps the challenge we have in Nairobi and some major towns in Kenya today, especially as regards real estate, is oversupply. And so this is why more and more financiers like Housing Finance or KCB are preferring bottom of the pyramid housing schemes. Affordable is the word, and perhaps more out of Nairobi into the smaller towns of the country. But when you come into the stock market, again, there is the benefit that even when you have lost, as that friend of yours lost 1.5 billion shillings, it is what we call paper loss. It is not actualized. In other words, if you can hold off and wait up for the market to turn around, you will still be able to get your money. What, however, we do is when you have such a loss, you buy more. I know at that time...
That sounds like voodoo economics. I've lost 1.5 billion
yes,
Kenya shillings.
Yes, you have.
And you come in
yes.
as a financial expert that you are,
yes.
and you tell me now, Ms. Sandero, you need to buy more.
You need to buy more. We call it leveraging. Perhaps you bought, let's say you bought the share at, let's say it was KQ and you bought it at 20 bob. And now you have access to buy it at 3 bob. When you buy, let's say, the same amount at 3 shillings, your average price now becomes 20 shillings plus 3, which is now 11.5. In other words, your loss has been, so to speak, neutralized. If should the price of KQ go up even a little, you will still get significant gains, as opposed to someone who just idly waits off for the price to turn around. Yes.
And there are shares that do really well. So it begins escalating, and your money is coming in 2 times, 3 times, 4 times. When do you cash out? Because sometimes you wait 2 more days and then the shares just tank.
So this is what we say. One of our key segment of businesses is investment education. And this is what we say. We discourage people from going into speculative business. That's not something that a stockbroker will tell you, because when you are in speculative business, you are improving their revenue significantly. But what we observe is that it is expensive in terms of the costs of transaction, but it also adds very little value, as opposed to if you come up with an investment strategy and you say, listen, I'm going to invest in Safaricom for the next 2 or 3 years. So you say that every month I'm going to buy some more shares every month of Safaricom, let's say KCB, and maybe one manufacturing, EABL. At the end of the day, what you're doing is you're building a portfolio. You're building a portfolio. So whether the price falls in 2 days or remains the same in 2 days, it doesn't matter. You have a strategy, you're following it through. What you do is you can review it after a month, after a quarter, after a year, after half a year, but you do not necessarily respond to the graphs as they go. In 2 or 3 years' time, the value, if you got into a good share, the value that you have will have appreciated. And that is what we are recommending, as opposed to a speculator. Now, on the other hand, of course, there are those who speculate, and it's a bit expensive. You need to have the know-how to know how the market is going to behave. You need to understand when the graph does this, what does it mean?
Okay.
What am I looking at in terms of projections on this counter? Without that know-how, you will burn your fingers significantly for the first few years. But if you get it right, you're much better than an average investor.
Now, while we were talking, you mentioned something. We talked about the real estate, and this is a sector that the government has factored into the Big Four agenda. And I want us to briefly talk about the Big Four agenda. The government is allocating money into it, and the government intends to ensure that by the end of the 5 years of President Kenyatta's tenure, this project can be of benefit to people. However, how can the government ensure, because this is an investment, right? And Hinga says once you get the house, it's a long-term investment, not just for you, but for your kids. But how can Kenyans make the most out of these investments?
Well, if I can comment on the housing first within the Big Four, before I go into the gist of the matter. I think it's the betting culture that has gotten to the government. The government is gambling with our money because they say, you may or you may not get it. That sounds like spot pesa. But now coming to the real idea of Big Four, I think it's a brilliant idea. In his first term, President Uhuru had invested a lot in brick and mortar investment, which is mostly infrastructure. And you saw this with the SGR, you saw this with roads. Now, however, we complained that the problem with brick and mortar investment is that it benefits the country in the long term. But in the short term, you find that, yes, we are investing billions of money into these infrastructure projects, but there is still unemployment. There are still gaps in health sector. There are gaps in the education sector. And so now what he did is he moved his focus from brick and mortar to something more humanistic in nature, creating employment through manufacturing, responding to the health needs, responding to the housing needs of the population. And that is how now the big agenda came into focus, the Big Four agenda. It's a very brilliant idea in terms of how it was conceptualized. Now, when it comes to implementation, this is where we differ with some of the guys who work for the government, because you cannot tell me you're deducting my money, forcefully so, and then you're telling me, dude, you may or may not get the house.
But what CS Hinga says is you go to online, you register for Boma Yangu, and then those who will be lucky, they'll have also to pay. You'll still have to pay. You're not lucky. You're lucky to be in that draw category. And then you'll have to pay. So they say 1 bedroom is 1 million shillings, 2 bedroom 2 million, and 3 bedroom 3 million Kenya shillings. But again, if you're saying it's affordable housing and you're targeting Kenyans of low income, do they have 1 million shillings to pay for those houses to even begin?
It's interesting. It's a very interesting idea. First of all, where we are right now, there are 1 bedroom, 2 bedroom, 3 bedroom houses, 1 million, 2 million, 3 million. If you go out of town, out of Nairobi, into places like Mombasa, Kisumu, they are coming up with very good ideas of affordable houses, 1 million, 2 million, 3 million shillings.
So what the government is doing is not new?
It's not new, but it is more expensive. And this is how it's more expensive, because one, you're deducting money from me to build these houses. I'm not even sure if I'll get these houses, but you're still deducting my money. Two, you're still getting money from the World Bank to do these projects. And that is still a debt that I will pay, and my children after me will pay. Three, you will still set aside some money from your budget to ensure that this is done. Why don't you just say, you know what, we are going to give tax holiday for the likes of KCB and Housing Finance and get this thing done. And perhaps make the arrangement between the World Bank and KCB directly, because they are already delivering. In fact, if that happened, the prices of 1 bedroom house would probably come down to 500,000 or less. And the inefficiency and the corruption within government, we will avoid that, because then you will have sorted the problem of government getting involved in business and crowding out smaller players. So
when the government says public-private partnership, it's not just a word. They need to sit down with the private sector and find a way of making it work.
Absolutely. And the housing, listen, the housing idea is one of the worst projects ever done by any government alive.
No, but it has worked in other countries. It has worked in Singapore, in Canada, in Brazil.
Really? How has it worked?
Okay, so the framework in Singapore is very different. They deduct 22% from your salary. However, there's a clear-cut procedure. It was a project that began for civil servants. So the government will deduct and give you houses, and you'll pay over a period of time.
Give you houses. So it's not a gamble.
Yes.
Because where we differ with this government is, one, the cost. It's outrageous, the amount of money that is going into this project. Two, there are the loophole that has been created within the law. They say that if you steal our money that you're deducting, you are entitled to 10 days, I think it's 10 days imprisonment or something. That loophole was just funny, if not comical. But three, the main issue is it's a gamble.
Yes.
You are forcefully taking my money and you're telling me, listen, you may or you may not get the house. It's a gamble. That's worse than spot pesa.
Well, this is a very interesting conversation, particularly the Big Four that we cannot exhaust today. And you say the gambling culture has gotten to the government.
It has gone to the government.
But,
sadly.
you know, this is a conversation we cannot exhaust, and we can pick up another day. However, you've written very interesting articles. And one of them was a business cannot flourish without factoring in religion. And that's one of the human factors that he said the government was looking into when it was investing in the Big Four agenda. So talk to us about that piece.
Well, first of all, I didn't say it's a must, but I said it's a very important factor to consider. If you look at the amount of money that religious organizations move today, it's humongous. It's a huge amount. They own some of the biggest universities today in Kenya. They own the best schools in the country. They own media stations. They own literally almost anything and everything. They are ethical investors into the stock market. They would not invest in places like BAT or EABL, but they will still go into the market and buy bonds and buy stocks. And so there is a lot of money there. But the beauty, on the other hand, in terms of also retail, is there can be a very cohesive constituency or a very cohesive market, as it were. They are very close to each other and they have a lot in common. And so if you can target that segment with your products and offerings, then you can actually get a lot of value out of it. And we have seen that it has worked in many places. I know there was this gentleman who used to do sell land, and his main focus was the religious FM stations and churches, and he did very well over time. And so it is a very good way of ensuring that you get turnover for your business. Yeah.
Well, we've run out of time, unfortunately, but I'd love to have you sooner so that we can pick up this conversation, particularly the Big Four one. But before I let you go, I presume that's your camera. So 30 seconds, what do you do at Elim Capital, and why is it necessary for anyone to be financially intelligent?
Thank you. Well, we focus on 3 items. That is investment research, investment education. We also do training on personal finance and corporate finance. We also, yes, and we are having the next training in Mombasa on the 22nd of June, and we are all welcome. And so we believe that we are here to empower the public financially and in terms of investment, and we hope that you will learn something out of it.
Well, great. I'll send you an invoice for that advertisement you did right there. I know where your offices are. Tabitha will send it.
Money is not a problem.
Oh, I have been humbled. Thank you very much for making time.
Thank you.
Well, there you have it from William Odhiambo. It's important to be financially intelligent if you are to flourish financially and your business is to thrive. This is not a conversation we can exhaust today, and that's why we'll pick it up on social media. #BusinessAM. The handle is @MetropolTVKE. As always, every good thing has to come to an end. 9 o'clock on the dot, we have to say goodbye, but stay tuned on Metropol TV. We have business briefs coming in at 1 p.m. I'll be joining you for Metropol News at 1, business briefs to 4 p.m. Nina Shaban at 5 p.m. 7 a.m. and I'll be coming in at 9 p.m. with Metropol Debrief, the debut episode, so you don't want to miss that. We'll be talking to Kwame Owino, who's an economist, on whether Brexit is a pain or pleasure point for Kenya's economy. On behalf of everyone that made the show a success, Cindy and Jesse, Tabitha, super producer, Richard, my director, and what's his name, Patan. Thank you very much for watching. We'll see you again tomorrow, same place, same time. God bless.